Good morning. It is December the 6th, 2016. Time to kick off another trading day. And, it's it's interesting how the news and the markets are managed today. They're managed either by direct central bank intervention around the globe. There's G20s all on the same page, or by news events. So we move from FOMC to ECB to OPEC, non-OPEC, and so it goes. And what these two entities and OPEC can do, they freeze the markets. They hold it in a range that's acceptable to G20 or to OPEC, as the case may be. And right now, oil is under pressure because November saw the highest production in OPEC's history across the board. But OPEC's going to cut production. They're going to get that under control. They're going to bring it back, and we have the OPEC, non-OPEC meeting coming up. ECB, will they extend the current QE program? Will they add to it because of what's going on in Italy? We have the Italian bank crisis. There's all sorts of stuff that will be announced on Thursday. If the ECB cuts back on their QE program, doesn't extend it for 6 months, interest rates are going higher. They really can't stand that unless they're seeing more out of their economic numbers than the rest of the world is. Fed right now, once we get through the ECB's rate announcement, we'll move to December the 14th. Will the Fed raise interest rates or not? And it's pretty well accepted that they are going to raise interest rates. So this is how the status quo is maintained for each of these interested parties in whatever markets or securities or whatever their bailiwick happens to be. So right now, the next big news event will be the ECB's rate announcement and policy announcement on Thursday. And from that, we'll move to OPEC, non-OPEC. So we do have some news today. We've got international trade minus 42B. No one will pay any attention to it. That's where it's pretty much where it always is. Non-farm productivity plus 3.3. That's a good thing. That's where wealth is created. Might cost you your job. Unit labor costs up 0.3. And the big number today is factory orders up 2.7%. So this will be the number one focus. Right here, these two numbers go into the long-term economic projections, but rarely see any reaction from the market, and this just, the trade balance just is. So here we have, if we put the overnight action, you can see it's contained. It was higher. It's a P. Volume is above time. But given Thursday's rate announcement by the ECB, we're probably looking at a trading range. Sell 1, 19 to 23. Sell 2, 27 to 31. On the buy side, we're right at support, so 9 to 13. News can affect things today. Factory orders number, and then 1 to 5 for number 2. Oh, we definitely have a seller above 28, and we've got a buyer below 24.04, and we find ourselves just right in the middle. Yeah, I split the bond 3 ways just to kind of show you where. So we've got some resistance basically at 150.20. Then it jumps up to the 28 to the buck. And we're currently at 15 right now. So this 20 to 24, number 1. Sell 1, 27 to 31. Sell 2. We've got a trading range. Like to get it done at 7 or better, but we'll make it 3 to 7. We do have news today, factory orders that could change things. On the buy side, 8 to 12. Number one support, so 1 to 5 is buy 1. And 21.25 is buy 2. Structurally, there's a seller above 151.12, and there's a buyer below 149.16. Two-handle range. That's a big range. This contract moves, and there's a lot of money in it. Once you understand its personality, and its personality is a responsive market. And for a novice trader, and what most people don't like, it makes you buy into weakness or sell into strength. Now this, if you're a losing trader, you already know how to buy into weakness and sell into strength, because that's where all your big losses come from. So you can capitalize on that skill that you've developed and make money trading bonds and notes. I say that somewhat facetiously, but that's the skill you need to knock the ball out of the park on this contract. And most people don't like that. Most people, I want to buy it and it's going to go higher, and I want to sell it, it's instantly going to go lower. You like to jump on board. And then you discover what the meaning of trade location is by doing that. If you don't have a lot of volatility in range, jumping on board doesn't work very well. Okay, gold, 75, 77, sell 1. 80, 82, sell 2. Right in the middle, we know there's a buyer below 63, and we know there's a seller above 83, $20 range. On the buy side, 69 to 71, and 64, 66 for buy 2. Okay, the Italian banks, Monte Paschi, I'm pretty sure I did not pronounce that correctly, but back in the news saying they will have to be recapitalized or restructured by the government, going for a state bailout. And if you're printing money, you can do that. And because G20 is printing money, if they can't borrow it to spend, the old-fashioned way, they just print money. And you end up like Venezuela. There's no way to get around that. So that supposedly is behind the selling in the euro. 107.50, sell 1. 75, sell 2. On the buy side, 25, buy 1. And the buck, buy 2. Like we said, boy, my mouse is going crazy this morning. Like we said last night, I want to come in as a seller, and I was hoping to sell. Actually, we had 75s to 108, and the high was what, 89? That was our sell. I guess down the euro. We came in wanting to be a seller. You took that information home with you last night, and hopefully those of you that trade London capitalized on that. I know, but what if I'm wrong? Sometimes you are wrong. You just have to step up to the plate and give it your best shot, and keep your losses manageable when you're wrong, and you will put money in the account. This way of looking at the market, framing it, there isn't anything out there that's any better. Now, there's stuff is less subjective, mechanical, but it doesn't give you the first trade like our template does of the day. Okay, crude oil. The news started to leak out last night. The late selling was blamed on the article that OPEC is producing more than they've ever produced in their entire life. That news was out in the morning and capped the rally. So this is the spill that supposedly that article created. So we're at 51 right now. That is support. And the last rotate down yesterday in A period was 50.85. And we have that value area right there, 50.62. So I think we're going to get stops below 51. So we'll make 50.50, 50.75 with the idea that OPEC might come out with an article today saying that, hey, things aren't so bad. We're going to get a deal which will rally us right back up. 51.50, 51.75, sell 1. 52, 52 and a quarter, sell 2. I think we're headed a little lower. But the danger, because of news article, is being short. And OPEC will come back and bail themselves out and support prices several times before the 10th. The argument right now is that while they may have a deal on paper, it's already coming apart in the marketplace. And everybody points to that article by a Saudi prince that says, oh yeah, we cheat. We've been known to cheat. Duh. Well, everybody knows it and everybody expects them to. It's kind of built into the pricing. Okay, 7 to 2209 is resistance. We've got a P, so I think we're going to trade higher, maybe get stops above yesterday's high. So 9 to 11, sell 1. Got that high, I think at 1375, so we'll make 14 to 16, sell 2. On the buy side, 2200, 2202, buy 1. 95, 97, buy 2. Nobody's changed their mind. Market's still pointed higher, giving up very little on the retracement. Okay, the big news today is factory orders, plus 2.7. We have international trade minus 42 billion, productivity, non-farm productivity up 3.3, unit labor costs plus 0.3, and IBD tip economic optimism 52.3. That number could come in higher because of the Trump election, but the focus is factory orders. It'll take a bit to get everything up and posted. I'm going to get busy on that. I'll be back with you as soon as possible.